To change gears there, I think the real takeaway is if you're going to do a highly profitable trading strategy that may be criminal, don't tweet about it on the internet.
That too, yes.
Like this guy could have been a ghost, and they would have had to get Chainalysis and law enforcement involved to find him. But within an hour, he was posting about how he did it on Twitter.
Welcome back to Briefly Creo, episode 5. Once again, I have the Creo team here to discuss the latest headlines in the crypto space. However, today we do have a special guest with us, Harrison Dell. He is the founder and sole director of Cadena Legal. Harrison specializes in innovative tax solutions, particularly focused in crypto assets and technology-based businesses. He's known for his insightful commentary on tax issues, especially those impacting the general public. With a TikTok following of over 36,000 and 7 million views, Harrison is a well-respected figure in the field. So you might have seen him in publications like Australian Financial Review, sharing his expertise on Australian tax law. So welcome, Harrison.
Thank you for having me. That was a very kind introduction, kinder than I thought. So thank you again.
We do have lots to cover today, so I'm going to jump straight into the first article, which is from CoinDesk. Binance founder CZ has issued a heartfelt apology ahead of his sentencing today, following charges settled with the US Department of Justice in November 2023. So, David, what's your predictions for today?
Yeah, it's going to be interesting to see what happens. The Department of Justice are clearly trying to make an example of CZ. The original settlement deal that they reached, which wasn't just with the DOJ, as with some other government departments as well, including the Anti-Money Laundering Authority, didn't say anything about a prison sentence. So now they're trying to pin him with a 3-year sentence. Prosecutors say that is more than reasonable. His lawyers say that it is completely unreasonable. If we look at what it would look like here in Australia, it's unlikely that a anti-money laundering non-compliance charge would result in a prison sentence. Of course, Binance is huge and they were moving a lot of money. There's been allegations that they were assisting known terrorist groups, which is obviously a real problem for everyone. But at the end of the day, he hasn't pleaded guilty to laundering money or any other crime. He's pleaded guilty to non-compliance with anti-money laundering regulations. We'll have to see what happens. I think a 3-year prison sentence will send a signal out to the crypto industry that the Wild West days of crypto are over. But at the same time, he's already resigned. Binance has agreed to pay a $4.3 billion fine, which is, I believe, the largest corporate fine in this area in history. So people will have differing opinions about whether that's enough or whether he needs to spend some time in jail.
I think with things like this, the laws might be a bit different in the US as well. But here in Australia, generally speaking, unless there are specific legislation that makes the director or CEO, whoever, liable, generally speaking, corporate liability is corporate liability. There are times when the director will become liable. That's when the director is basically, or CEO is the directing mind behind a lot of the actions. Like there's nobody else and the director was the driving force behind it, basically. Or there are times when legislation might specify direct liability or what they call strict liability. So even if it's not the CEO's fault, if the company does this, then the CEO or the directors will be found liable. In Australia, that's not the case for anti-money laundering legislation. There's no provisions in AML/CTF legislation that will pin the director, pin liability on a director or a CEO purely because the company committed an act. So it makes it, if it's in Australia, I think it could actually be an uphill battle to try and say that the director, well, he must have been involved in it somehow, in that corporate responsibility. But for CZ in this case, I think he was trying to do the right thing, no matter what he'd done before. Like he did come out pleading guilty, never tried to fight the charges. So I think he would have been blindsided as well by the DOJ's attempt to pin a prison sentence on him. But we'll see what happens. I do think because of the scale of the offences, he's doing his best to show as much good faith as possible. But because of the scale of the offences and the fact that he's already pleaded guilty, I mean, I don't see it as impossible that he will get a prison sentence. So, yeah, we'll have to see what happens.
So stay tuned there. We'll find out maybe later today. Article 2, also a CoinDesk one. US President Joe Biden has proposed a series of measures, including a crypto mining tax and changes to wash sale rules for digital assets in the fiscal year 2025 budget. This could potentially generate nearly 10 billion in 2025 alone. Harry, where do you sit here, and what are the challenges with crypto taxation?
Oh, where to start? But let's start with just US taxation as a whole. It's a complete basket case. Any US tax regime, it's like, if we're talking federal tax. When we're talking federal tax in Australia, we're talking about 90%, maybe 80% of the taxes that people pay. But when you talk federal, it's more like 50%. A whole bunch of weird state things as well. I doubt it's going to collect much, really, of anything, because the level of non-compliance in the US is so high, and the IRS already know that. And it's kind of just like the previous article. It's feeding into the culture of the IRS and, the SEC and other organizations, where they regulate using the stick, and it doesn't actually get that good results. That's been shown for a very long time. But the crypto mining tax, a tax at the miner level, it was more of an anti-avoidance thing, because if you tax it at the miner level, then you've got something, you've clipped the ticket somewhat on the way through, and there's less sort of burden on the investors who are very non-compliant in the US, at least. So the mining tax, it makes sense, but they're just going to not mine in the US. They're just going to mine somewhere else. So any domestic focused tax on anything crypto business related doesn't really work, because you just go to the UAE, which is where everyone's going right now anyway. And the US has got a bit of a reputation problem with crypto. So there's less and less concentration in that market. It used 10 years ago, if you're talking tech companies, you didn't have a choice. You have to be in the US, really. But these days, you kind of don't. And the US hasn't realized that yet. The wash sale bit, so just so everybody is up to speed, a wash sale is when you sell an asset and then rebuy it immediately. And the reason you do that is to trigger a taxing event, usually a loss, so that you can use that loss against other actual income or capital gains. And governments don't like it, because you still have economic exposure. Nothing's really changed. You've just arbitrarily done something. The US has got very specific rules on wash trading. I think it's 30 days. And I just don't think it's that exciting, because people just will wash trade anyway, and it's almost never enforced. In Australia, we actually don't have any wash trading rules specifically, but we've just got the general vibe of the anti-avoidance rule, and the ATO says, don't you dare. And that seems to ward off most people. But in the US, the wash trading is the least of their concerns. What their concern should be is getting people educated and compliant with tax. But again, ruling with the stick, this is how it goes. More legislation that doesn't do an awful lot. That's my conspiracy view, at least.
They've got such a large tax base. I mean, every citizen has to pay tax, but like you say, they don't have very good compliance. The way the US is going, it's becoming harder and harder to justify launching a crypto project out of the US. Tax is just one element, but it's, regulation by the SEC is another one. It's making more and more sense to go to a Dubai or somewhere in Europe even. It's going to be interesting to see where the capital goes, because the capital will follow where the good projects are.
Yeah.
So
it's like the US VCs, the incumbents. It used to be with Web 2 stuff. If you didn't have any US revenue, they said your revenue's zero, because it's the only economy that matters, which is just bizarre. But that's the way that they work. And now it's, we've got this borderless currency technology system, various systems where people can build anywhere in the world. I don't think markets are that important anymore. Legally speaking, you need a company and you need a business structure or whatever. But more and more, I'm seeing projects where they're people working remotely. They're in Portugal, and as long as they can get those connections in UAE or US or wherever, it doesn't seem to be that much of an impediment anymore. It really used to be, but the US it's just not cool anymore.
Yeah, it didn't make any sense to me politically as well, because we're sort of approaching a US election, and the last thing you'd think a candidate at the presidential election is going to be is to increase tax rates. Because I think across the board there was talks about increasing the CGT in the United States to 44.6% or something. So from that perspective, it just sort of seems like one, the wash trading aspect, they won't be able to enforce it. So are they just playing with optics? But then who are those optics for? Because there are millions of people around the world and in the United States now that want to trade cryptocurrencies. So who are they pandering? Who is this pandering to effectively? I thought it was really strange.
Yeah, it's very strange. A lot of the tax policy from the US is very, very strange. Like the reporting stuff that they're trying to enforce on DEXs, it's just nonsensical. It's a very strange approach. And the EU, when they tried to do silly things like require KYC for any transaction over 1,000, like they fixed it because it was so silly that they got told so many times this doesn't make any sense that they actually changed it. And like I can respect that. But the US just like proposes stuff and you tell them it's dumb and they do it anyway. And I think we'll talk about the 44% a bit later. There's more articles about that.
Yeah, I mean, like there's just such a practical challenge in tracking what happens in crypto land, right? Like especially for taxation purposes, it's next to impossible to really enforce these things. And if they like the practical outcome would be people will shut down in the US, geo-block US, and continue on for the rest of the world. And people in the US will use a VPN to get around the geo-block. And so there's really no change.
Yeah. The problem with tax systems globally is that we still do it piecemeal in each country. We've got these global agreements, but they're very basic. If the US is going to have silly tax regimes that stifle, global economic growth, then they're free to do that. Yeah, it's kind of a byproduct of democracy. Is tax has become this talking point and this victory point where taxing people we don't like more is always popular, and any sort of reform is just too hard, and nobody ever wants to backtrack and change their mind. So the US, I think they've gone down this path of using tax, as well as securities laws and all sorts of things to attack crypto, and they're just not going to back off because it would look silly now if they did. They're too far down the rabbit hole, and I think that's why the US is just going to miss out on a lot of that growth, which it's like they've been the tech hub for 30 years, even longer, and it's just losing that shine. It always does. No economy is at the peak for forever.
Carrying on from that, whilst we have you here, Harry, what about the state of crypto tax then in Australia? We're still waiting for the publication of the Board of Taxation's report to the government about crypto tax. Why do you think it hasn't been published?
Well, it's not unusual for the reports themselves to not be published. What's unusual is the submissions that are put to the Board of Tax are normally published, and the Treasurer can release the report or not. The Treasurer can decide not to release the report, and it's not common that the report isn't released eventually. But this report was done in February. It's been at least 2 months since it's been done. That's after it was delayed over 18 months to completion. And the Board of Tax had, some rocky road in the middle there. But I don't know if it's not being published because there's something in there that government doesn't want people to see, such as criticism of the current approach, which I think is likely. It's very hard to not criticize how the ATO has approached their public guidance and all sorts of things, and how government has approached policy reform. And I know, David, you've been involved in a bunch of the policy discussions, and it's excruciating. It's so excruciatingly slow. It almost makes you jealous of the US, who can just like shoot random proposals on whatever they want, whether they're good or bad. At least something's happening. It just feels so stagnant over here. I've been whinging about this stuff for 2 or 3 years now, pretty actively. And we've had, in that time, the only new guidance or law we've gotten is one minor change to the GST Act, which was to counter a case that was being run, and some ATO web pages, which aren't really reliable and could have really been done in about a month. So it's not a priority for government, and I suspect the report makes them look bad. So the Treasurer's just not going to release it.
Do you think we need crypto-specific tax rules, or do we need clarity about how crypto is dealt with under the existing rules?
We don't need specific rules. We don't need Division 420 that does crypto tax, which is what I suggested. But what we do need are some adjustments, because the system, CGT system, income tax system, it's built to be relatively industry agnostic. So we don't have like a property tax regime. We don't have or we do in states, but I mean federally, we don't have a property tax regime. We don't have a share tax regime. We don't have many specific rules about dividends. We have some to make it all work, but it all goes into the bucket of income or capital gains, really. And that's all we have to do, is just make a few adjustments to make it make sense. And one of the proposals that we've put to government recently was alongside Blockchain Australia, about a separate CGT event for smart contract usage, and essentially using a smart contract, unless it changes the economic ownership of what you've got materially, you should just ignore it for tax purposes. Because right now it's like such a hot button issue, and that adjustment would solve like a good amount of problems. And if anybody's calling for reams and reams of legislation, that's usually a bad thing in tax world. It's long enough already.
The smart contract integration piece is an important one, because that impacts staking, right? And
yeah.
I mean, not just staking, but staking is a big one. Yeah, like you stake something, and my understanding is that if you stake a token in a smart contract now, it's considered a disposal, and then if what you get back, even if it's the same token, is a new acquisition. Is that right?
That's the ATO view. I think it's dead wrong, but that's what the ATO have published. And, I'm always very careful when I talk to clients about, if you're going to go against the ATO view, then you need to know what comes with that. It shows a lot of misunderstanding of what's actually going on, because CGT regime was meant to tax realized gains. We've got these problems right now with governments trying to tax unrealized gains in superannuation, and it's got people very upset. And that's what's happening here with smart contracts. If I'm staking it, it's not really an economic realization. It's just, turning on a dividend switch on a share that was otherwise off. It's just inappropriate. And that's what I've been saying. You've been using that word for a very long time. It's just inappropriate. We're not going to get concessional tax on crypto in Australia, but right now the system makes it much harsher because it has no regard for it. So it's just, let's make it fair.
To put things into perspective, I mean, there are countries in the world that don't tax crypto at all. I believe Germany is one of them.
Yeah, Germany's got, I think if you hold it for quite a period, it's exempt. But if you do active stuff, then it's just taxable as income. It's relatively clear.
Yeah, so there are a variety of approaches that we could take here. I'm always in favor of a light touch, right?
Yeah.
If it ain't broke, don't fix it. And I think a lot of people in the legal community are probably guilty of trying to promote a full overhaul of the legal system just to accommodate crypto. And I don't think that's the right approach, whether it's tax or otherwise. Our laws work perfectly fine. We certainly don't need more laws in general. That's the problem with laws, right? We only ever get more of them.
Adding more. You sound like Kerry Packer, David. We tried to reform the tax law, and in the mid-90s, we got halfway through, ran out of money, and that's why we've got 2 tax acts. We already tried it, and it was difficult and time-consuming and very, very complicated. And I think that sort of scarred a few politicians. And, we haven't had any significant tax reform since the GST in this country. And there is no talk of doing it anytime soon. So, look, it's certainly broke in certain bits, but, it is kind of taped together and it works. And adding more to it, I'm against that as well. It's those adjustments that's really all it needs. Like a chiropractor, just a couple of kinks, crack a few bones, and then we'll solve 90% of the problems.
Yeah.
That's all. That's the best we can do, I think.
That's an awesome summary, actually. It was really interesting. Next up, we are covering a significant legal victory for Coinbase. The United States Court of Appeals for the Second Circuit ruled in favor of Coinbase, confirming that secondary sales of cryptocurrencies on its platform do not violate the Securities Exchange Act. This decision has some broad implications for individuals who traded tokens on Coinbase from October 2019 to March, was it 2022? Sandy, can you summarize the details of this ruling?
Yeah, sure. Look, I think there's a bit of sensationalism going on both ends. That is on the crypto natives end, and also on the other end of people trying to sue Coinbase, right? I fall in the camp of smaller subset camp of people that actually like to read the judgments that the articles report on. So if you look at this case, what happened originally was that the background to it is that some investors have sued Coinbase, alleging that they breached securities rules by allowing these people to trade crypto on their platform, because this crypto should have been securities. And they're suing they're investors. So what they're doing is saying because Coinbase was basically operating as an unlicensed securities exchange, these transactions they entered into on Coinbase should be reversed. Right, so they get put back in their original position because obviously they've lost money conducting these trades. So this is separate to a case that SEC is running against Coinbase for operating as a securities exchange. So this is just I think 2 or 3 investors trying to get their money back for these transactions. In the original case, the judge said that they believed because Coinbase did not at any point have title to these tokens that the investors sold, it could not have been operating as an exchange, in the sense that they're not a broker or anything. They haven't actually these people haven't bought the tokens from Coinbase or sold it to Coinbase. Now on appeal, the judge said that it's not fully clear. So Coinbase could have at some point had title to these tokens. So in that sense, that's a win. That's a win for these investors and anybody that wants to say Coinbase is a securities exchange. But although Coinbase could have held title to these tokens, the problem here is that there has been no specific contract between the investors and Coinbase in relation to these specific transactions that they want reversed. There are conflicting user agreements on Coinbase's end, but the long and short of it is, in this case, the investors didn't put up enough evidence of specific contracts existing for those specific transactions. Because how it would normally work if you had an actual exchange when you buy and sell from the dealer is that for every transaction, there's an agreement to buy at this price and sell it at that price, and there's a transaction record, and then there's that contract. Every transaction is its own contract between the investor and the broker, the exchange that you're working with. And so in this case, there's no clear evidence of that. So what we're talking about is actually a motion to dismiss. So because Coinbase said that there's not enough evidence to suggest that this case is even possible to be pursued, the entire motion should be dismissed. And they've succeeded on that front in this case because the evidence wasn't quite up to scratch. So in terms of how significant it is, it's actually a little bit questionable. I think it's okay now because Coinbase's current user terms are very clear. They say in the user terms that you're not buying anything from Coinbase when you buy and sell on their platform. In the past, that wasn't clear. For this case, they were dealing with transactions from a few years ago. And at that time, there were conflicting versions available on the Coinbase website. So it's still a possibility and that this could have happened. If there wasn't ever a buy or sell transaction with Coinbase for these tokens, then this entire thing with saying Coinbase is an exchange, that goes away. So look, I don't think this case can succeed now, as against Coinbase between investors. But in terms of whether Coinbase was operating in the market, for example, for unlicensed securities or whatever it is, that is very much still on foot. There's a current case. SEC is pursuing that against Coinbase. So look, I wouldn't say we had a significant win yet. Coinbase isn't out of the woods. This case is, I think the effect is actually quite limited to this specific instance.
Well, I think this is just one piece in a long history of battles between people in the crypto space or businesses in the crypto space and the SEC. It's not going to end with this one. But the challenge is, and Danielle mentioned this in the last episode, and I saw a meme the other day, or someone shared something with me. The SEC says crypto is a security. The CFTC says it's a commodity. The IRS says it's, property or whatever. And they're all trying to sort of claw their way into the space so they can put a stake in the ground and say, okay, well, this is now our territory. There needs to be some consistency between government departments, right? Like we have the same problem here, with the ATO and ASIC and even AUSTRAC with the anti-money laundering. There doesn't seem to be any meaningful communication between the different government departments. And that just makes it 10 times harder for anyone in the space to know if what they're doing is legal or the right thing to do in the long run. They might do something to ensure that they don't fall afoul of the SEC or ASIC in Australia, but then they get pinged with some tax or they open up a can of worms with anti-money laundering. It's a real problem.
I always wonder if it's blaming the government departments for being inconsistent or it's blaming the design of like how they were cut up, because very high level, ASIC runs the corporate registers, but the ATO runs the Australian Business Register. Why don't they just run in the same register? Why do we have two registers? It doesn't make sense. But it's been that design for a very long time, so it's just kind of, that's how they've always done it. And the only effective communication I've ever seen between government departments has been, one department, saying reluctantly, yes, your thing is fine, and then they refer them to the ATO or to ASIC because, their ICO is actually generating income and they need to be taxed and all of that, for instance. That's the only time I've seen good reporting, is basically when they can, take someone down. But when it's trying to do a positive, consistent approach for, Australian citizens, you just don't see it.
I had a call one time with Austrac, a joint call with a client, and the client deals, it's a GameFi project and they deal with a lot of NFTs as in-game assets. We arranged that meeting and I think they had like 5 people from Austrac join the call, like people from their policy team and people from, I don't know what they did, but they were all listening intently. And I asked them, I said, and this wasn't that long ago, really, it might've been a year and a half ago. And I asked them, well, have you considered whether the sale of an NFT is caught under the AML regulations as the sale of a digital currency? And they said, no one's ever asked that before. So, I mean, if they don't know what to do, like, how are we supposed to know what to do?
Yeah. They're the guardians, and, they should have a good amount of subject matter experts. And if they're lost and haven't thought about it, it's concerning. A year and a half ago, we were still in NFT. Sort of summer was ending, I guess. No, it had already ended by then, but GameFi was still good.
I don't know if they've advanced from that position or not. Like, I wouldn't be surprised if they still really don't know the answer to that exact question. I'm assuming they've started to hire in some talent, or like all government departments just hire in some knowledge about crypto, because eventually they're just going to look stupid, right? Like with what they say and what they do, if that hasn't already been established. It feels to me that we're not going to get any meaningful change unless there's going to be some political advantage to making that change.
Yes.
Right? And that's the real problem.
Yes, the politics come into it. The same reason that they stay away from tax reform is the same reason they stay away from crypto. Solving the problem won't win people many votes. Us deep in the industry, we want to see it, but it's actually a really small subset of people that are passionate about this issue. And it's one of the failings of democracy is like majority rules, but sometimes majority doesn't know best and doesn't work for the benefit of everybody as they should. Yeah, not much we can do about it except making noise, unfortunately.
Next up, we have Consensys is suing the SEC over Ethereum regulations, aiming to protect the blockchain from what it sees as an overreach. The lawsuit contests the SEC's authority to regulate Ether as a security, warning of potential harm to innovation and the US economy. This battle could really reshape digital asset treatment and influence blockchain's future. David, what's your take on this?
Well, this is another example of the SEC trying to take a big player down. Consensys is pretty big. They're behind MetaMask. And an article says that, a report alleges that the SEC has issued a Wells notice to Consensys as well. If MetaMask, for example, is going to be considered an unlicensed broker-dealer, that's a real problem for crypto in general, because any decentralized wallet application is going to be caught by that. It's like trying to claim that the wallet in my pocket, the physical wallet in my pocket, is somehow a financial tool. It's a bit ridiculous if you ask me. The interesting thing about crypto is, and when you have these large public blockchain networks that aren't technically controlled by any one entity, you still do have these sort of bigger players that have influence, whether it's commercially or technically in terms of developing the blockchain network. If you look at Bitcoin, who can you sue? There's no one that you can sue if you have a problem with the Bitcoin network. Ethereum does have that problem. There's the Ethereum Foundation, Consensys. There are these big players that can be attacked, and it would be a hit to Ethereum if these bigger players get taken down. The ripples will be felt throughout crypto land. But, I have some confidence that these bigger players will be able to force a reasonable outcome, just because it comes back to, if MetaMask or a wallet app is going to be considered an unlicensed broker dealer, how are you going to enforce that? How practically will that look in the longer term? Are we just going to end up in a situation where the US are just going to shoot from the hip, and then all the talent and capital and activity is just going to move out of the US, as some of it is already done?
I will add one caveat though. I fully agree, if they're trying to enforce this kind of thing over a pure wallet app, it makes no sense. It's definitely not sustainable. But I wonder if, I haven't, it's a report, right? We haven't seen an actual Wells notice, or I don't think anybody else has. But it may be that they're targeting some of the recent additions to MetaMask functions. So because you can, within MetaMask app now, you can swap, you can bridge. If you go on MetaMask website, which there's a link for it in the MetaMask app, you can go to the MetaMask portfolio website, and through there you can also buy tokens, you can stake even. Now, I understand, I think these are all MetaMask partnerships with third parties services to allow a person to do that. But it now looks very much like that you can do this within MetaMask. I suspect if they got a Wells notice, it might be more related to this kind of thing. If they're purely going for wallet functions, I absolutely agree that would make no sense whatsoever. But if that was the case, there are other wallet applications that they would all need to go after. And then what are they going to say? Like, as you say, like any wallet that lets you interact with blockchain is actually a broker dealer. I don't even know how they're going to begin making that legal argument. It doesn't make any sense.
Yeah, I fully agree, Sandy. And just on that partnership aspect as well, if they are entering into partnerships with effectively other platforms that allow trading on MetaMask, like sort of via MetaMask itself, it's typically with a DEX, so a decentralized exchange. So even if they want to have some sort of enforcement action against the partnerships that are forming around this exchange on MetaMask itself, it's still going to be very difficult, because who's the central body for a decentralized exchange? And as we'll talk about with the that Wells notice that's been served on Uniswap Labs, it's very difficult to enforce something when there's a sufficient degree of decentralization, because the only people that are actively operating on these platforms are the developers. And so the token holders themselves aren't actually, they just participate in the governance aspect. So yeah, I can't see how it's going to be possible to actually regulate this non-custodial wallets and decentralized exchanges.
I'm not sure exactly how the regulation works in the US, but I feel like there is a degree to which if you're trying to regulate a decentralized, like a DEX or something like that, it's going to be difficult because of the way it operates. But I suspect the issue here is with how MetaMask approached the integration, because as I said, it looks very much like MetaMask is offering this service, and you can swap these tokens or whatever it is through MetaMask. Now, if they're maybe under the hood, they're using a DEX or whatever it is. I'm sure they haven't used their own tech to actually deal with these swaps. But the problem is that the way they're working, like that's how brokers work. The brokers are unsettling these transactions themselves. They go with somebody else to settle the thing, but you're investing through the broker to say, look, I want to buy this. I want to give you this much money through you guys, and I want to get this amount of stock in return. Right, this is the price you're offering. Each broker offers their own spreads, prices, or whatever, and this is the transaction I want to enter into. As I said, the broker is just the middleman. They're not actually executing the transaction either. So in that sense, I think MetaMask is starting to get close to that line, the way they have integrated these things into the app. I suspect that is the issue, but without seeing the actual Wells notice, it's just guessing.
This is kind of my vibe with all this US stuff that's happening, and it seems to be happening every week, is like, what's the point? Because making decentralized apps illegal, once it's illegal, no one will ever break the law. It's like, it's not how it works. So even if, MetaMask was wiped off for US users, which would be monumental, then there's 100 other wallets you can use anyway. And there'll be 100 new ones that pop up because it's pretty straightforward to sort of launch your own wallet app. It's pretty standardized now. Like you can buy them off the shelf as products and just launch it. It's too much of a whack-a-mole for this to be worth doing, which is just why the US government confuses me. It started to make sense when I read one of the SEC commissioners heavily criticizing the SEC's prosecution of crypto assets months ago. And I spoke to somebody about it, and it's, you know, like these administrators, some of them are elected, so they all have their own politics as well. And it just doesn't make sense. Like why would they waste time doing this?
I think the problem with the US right now is the SEC especially, they've gone a bit almost crazy with how much they want to protect the investors. I mean, whatever you say about whether that's the actual intention behind what they do, their current policy is protect to the extreme. I think what they want to see in MetaMask, again, I'm speculating a bit, but based on behavior I've seen from them in the past, if the issue is with the swap function, what they want to see is that they want all wallet apps, at least operating in the US, to not have built-in swap functions, to not make it too easy for the consumers, because if they think if these things are securities or potentially securities, the consumer should not be able to have such easy access to it. They need to go through the usual hoops of disclosure, etc. They shouldn't be able to just download the app and off they go, they're swapping. I think they want to see the swap function wiped, like all the buy exchange functions wiped from like the default functionality of a wallet. They want the investor to then be able to jump through all the hoops to, you know, go on a regulated exchange and have all the proper disclosures and whatever. If they need to be a sophisticated investor, they got to be a sophisticated investor, etc. To go through all those hoops before they can actually invest in these security tokens, whatever SEC would like to call them. So I've seen similar things with other things like on Forex trading. There's a few things going on there as well. I won't go into details, but essentially it's the same sort of thing. There were things that the US investors have been doing for a while, which is, I guess, sort of a workaround to the US regulations. It's in the prop firm industry, but there's a similar thing. There's now a crackdown, and they want to basically stop all US consumers from being able to access this product, because in their view, it's the investors aren't being protected. They jump into this without all the necessary disclosures, without all the regulations, without all the guidance of the SEC. So that seems to be their policy and approach to this kind of thing.
Yeah. So just to go on what Harry was saying before about the SEC, that whack-a-mole approach that they seem to be adopting, where they don't, it seems like they don't really care if they're going to be successful, because some of the suits that they're going about seem a little bit ridiculous. Like going after decentralized platforms, going after decentralized wallets, non-custodial wallets seem like a bit of an overreach. And yes, you can draw legal arguments and try and find a needle in the haystack, but it's like, why even do that when the technology that's actually being developed here is so innovative? It's going to help the US. It seems to me like it's a question of incentives, and a lot of the time these regulatory bodies have the wrong incentives, because there's no consequence if they fail. And in fact, if they succeed, it usually means some sort of a promotion for the lawyers in charge. But there's no consequence if they fail. So it's difficult when you've got the wrong incentives in place.
Next up, a CoinDesk article. Uniswap receives an enforcement notice from the SEC, prompting CEO Hayden Adams to declare readiness for a legal battle. The notice alleges Uniswap's involvement as an unregistered securities broker and exchange. So what is the background here and implications of this regulatory challenge, Inoke?
Yeah, so I mean, this again goes back to what we've just been talking about. It's effectively like a war on DeFi. Now it's an interesting one. So for the non-crypto folk, Uniswap is a decentralized exchange that allows the exchange of cryptocurrencies, and they've been served a Wells notice, or the lead developer, being Uniswap Labs, has been served a Wells notice. It's interesting for a few reasons. One, Uniswap never actually had an ICO. The tokens themselves were actually distributed via an airdrop. So there was no actual ICO like most of the cryptocurrency projects were doing back in 2017, 2018. And then on top of that, what's interesting is that you've got a situation where the tokens are actually used to make decisions on the platform. To me, it's a little bit like of an overreach. It seems like there's going to be, I don't know what the purpose is behind this. If you look back at some of the speeches that have been given over the years, I think it was William Hinman's speech, where he basically said that if a cryptocurrency is sufficiently decentralized, it's unlikely that it would fall within the US securities laws. You're probably not going to get more decentralized than Uniswap as far as DEXs are concerned.
I think at one point they weren't as decentralized, but at this point in time, they are pretty much fully decentralized. The only, I guess, weak point which Uniswap might be still vulnerable to is the front end, I think. Again, the front end, at the end of the day, the smart contracts are all decentralized now. Governance, everything is all to the masses, whoever holds the governance tokens. But the front end, as far as I'm aware, is still controlled by Uniswap, as in the foundation or whatever company that is in control of that. In that sense, I mean, there's a few things that the team implements. They even have, like, I think a certain token that they take off the list. That was their attempt to try and, I think, be more compliant with SEC. If the tokens that are clear scams or tokens that could potentially be securities and whatnot, they have actually removed some of these from the Uniswap front end. But that also shows that they have control over it. To what extent are they potentially exposed to, again, the same kind of broker-dealer arguments, because they're allowing the consumer to operate and use the Uniswap service without having to have a broker's license or whatever it is that SEC normally would require. And remember, the SEC's view at the moment is that they haven't been specific, but they try to say that most cryptocurrencies are securities. That's their view. So if that's the case, then Uniswap's allowing these securities from being exchanged without all the necessary KYC procedure, etc. That, I think that's what legally, that's where the SEC is coming from. In terms of what effect that's going to really have, I mean, again, I agree with Inoke, like in the end, what practical effect they're going to have. The best you can achieve is probably make everything harder for US citizens. I think that's the legal perspective where they're coming from. But yeah, I do agree. I think the whole approach is flawed, but no, that's where we're at the moment with SEC.
They haven't even established that all of the cryptocurrencies that are trading on the DEX are in fact securities. Because it's one thing to make an allegation that they might be trading cryptocurrencies that are securities. It's a completely different thing to actually say that they are now trading cryptocurrencies that are securities without first establishing that those cryptocurrencies are in fact securities. How can you be a securities exchange if the cryptocurrencies that are trading haven't been categorized as securities legally yet?
Yeah, look, I think that they have been consistent in as vague as they are, they have consistently said that they believe most cryptocurrencies are securities. So if they're going to actually proceed to try and enforce this against Uniswap, and if it is about the swapping of cryptocurrencies as securities, then at some point they'll have to actually advance legal arguments to say why at least one or two, they got to at least raise some example ones of why they are securities. So they have to come out and positively say that at some point in the litigation. But I mean, they're also, by the same token, they're also already trying to classify Ethereum as a security. That's a current approach, and that's why in the previous article, that's why Consensys is actually coming out to try and say that they can't do that. I think it's sort of a precursor to what's going to come. If they're going down the path of going after Ethereum as a security, if they succeed on that front, then Uniswap is going to be in a bit of trouble there, because obviously, like, especially on the Ethereum network, everything's being swapped against Ethereum, so that they'll be caught potentially if they try to run this broker-dealer argument, I think.
I mean, the same thing applies to Uniswap and MetaMask and all the other like front ends, right? Like the thing that you have with crypto is you've got a whole bunch of open source protocols. It comes down to the smart contract, right? Where anyone can give access to them through their own front end. And even the front ends are all open source as well, that you can, like, even like Uniswap, you can just launch an AMM tomorrow and use all the same Uniswap pools, but have your own front end. I think it's just like they're trying to go after the low hanging fruit. So, going after Uniswap makes sense strategically. I think they're just trying to take a shortcut by saying, oh, we think all cryptocurrencies are securities. So that's why we can go after like a decentralized exchange or a decentralized wallet application, because it's on the presumption that everything is a security.
Yeah, but that presumption, doesn't that first have to be established that it's legally a security? Like if we just have a look at the Ripple lawsuit for a second, it makes complete sense that they might go after Ripple Labs because they created the XRP token. To me, it doesn't make sense to go after a decentralized exchange, because you first have to establish that the tokens themselves that are trading on this exchange are in fact securities. Now, I can come out as a regulator and say, oh, look, I just assumed that every single thing trading there is a security. But that's a completely different position to have than actually first establishing that they are in fact securities.
They have their view. So it's a bit like saying a regulator is saying this new class of assets is actually a security. So the regulator they've issued that view. They haven't said which one specifically, but they said most of these assets are. So based on that view, they can engage in enforcement action. They can send a notice. They can say, we believe you breached it because we believe these are securities. And then there's a response, right? I mean, the response from Uniswap could have been, all right, okay, we agree, we fold, we agreed we have a breach these laws, and we ask for a lesser fine or a smaller sentence or whatever it is. That's one possible response. But in this case, obviously they're fighting. Now, if they fight, they reject it, then it goes to court. If it goes to court, then that's the point at which they would then have to establish this, because if SEC actually takes this to court and they want to actually succeed against Uniswap, they do have to then come out and say, all right, we believe at least these tokens are securities because here are the arguments. And then the court at that point will actually decide whether that is the case. So it's a question of whether they, the regulator can have the opinion on this, and they have issued the opinion that most cryptocurrencies are, even if they've been vague about which one specifically. In terms of how this order of things work, that does allow them to go ahead with an enforcement action. The actual decision at the end of the day, whether the regulator's opinion is correct or not, if it's being challenged, in this case Uniswap is fighting, then the court will have to decide.
I think it comes from this misnomer that Uniswap exchange is one thing, and when something's decentralized, it's not really one thing anymore. It's smart contracts, and it's people contributing capital into pools, people creating their own pools, different blockchains as well. It's this collection of stuff, and I think humans have this problem where we try and simplify things in our mind. And if we go, well, Uniswap, the website, it's like I'm using something else, therefore it is an exchange. Like, it's not really an exchange. Unilabs provides some open source software, and other people provide stuff. It's, when you look all the way through it, it's more like peer-to-peer trading facilitated with smart contracts and things to make the markets fairer. And I think it's pretty clear that they don't have that deep an understanding when they go to the software developer and they say, well, you're the one that made the exchange, when, just like David said, I can make a Uniswap clone in probably a day and have it launched tomorrow. But Uniswap Labs isn't running the exchange. It's the smart contracts have some kind of identity away from the people who made them, because now they're on the blockchain and they're immutable and they can be copied. They kind of don't know where to point the finger. And I think it's a bit of exploratory surgery. And hopefully that's how they treat it, not as this is a sure thing, because it's certainly not a sure thing for the SEC.
Next up, we have the Cointelegraph article, President Biden's plan to raise the federal capital gains tax to 44.6% is stirring discussions, but many crypto investors might find it insignificant. What implications does this hold for the average crypto user? Harrison, I think you're probably the one to weigh in on this.
I did have a look at this, and the answer is it won't affect most people, because there's actually two separate proposals, and one of them will only come into effect above 400,000 US of income, and the other one over 1 million US of income. So as long as you stay not too rich, you won't be affected by this. And I kind of want to put this in context though. 44.6, it sounds pretty scary. In Australia, we have a 47% top tax rate. Short-term capital gains above 180,000 will be taxed at 47%. Like, this is outraging in the US. We've had that here for like over 18 years now. Like, they're talking about this for people earning over, around, well, what's the exchange rate? 155 or so, around sort of 650,000 AUD. We'll tax them at, the long-term capital gains at a higher rate, but it's nowhere near what we tax them at in Australia. And I think it shows that the US system doesn't really cope very well with high tax rates like ours does. It does seem more like political point scoring, because it's just too much. And those people who are going to be affected by this are going to be so outraged. And it's not like it's law. It's not like it's passed. It's just, this is what we should do. And they're stirring sort of things. And it just feels like political positioning in advance of the elections coming in the next year, I think.
I think Canada's just increased their capital gains tax. I was reading something the other day.
Yes, Canada went to 66. Yeah, 67%. I think it was Paul Keating that said anything over 39% is confiscatory. I think that's pretty much right. And like 66%, that's insane.
Yeah, it's crazy. What was the US previously, or what is it currently?
Well, they have two different rates for long-term and short-term capital gains. And a short-term one is 12 months, and I don't remember the exact rates because they do change every now and then.
Okay.
Whereas our rates operate differently. We operate in the capital gains are income, but if you own it for more than 12 months, half of it's income and half of it's exempt. And on that logic, the highest long-term capital gains tax rate in Australia should be 23.5%, being half of that top rate. Because if you're on 180,000 and then you make a big capital gain, the most you should pay if you've held that asset for 12 months should be 23.5% on that total gain, which isn't too bad when we talk about realized gains. But in this proposal, they talk about taxing unrealized gains for the super rich. For the over 100 million in net assets, they start to tax 25% unrealized gains. It's like that poem, really, where, you know, they come for the super rich, tax their unrealized gains, and I said nothing because I wasn't worth 100 million US dollars. But taxing unrealized gains is so scary. Like in Australia, we've got whiffs of it in certain small areas, and people are up in arms about it, as they should be, because you haven't made any money yet and they're trying to collect taxation from you. It becomes massively market distorting. I don't think it's going to happen. It's even in the US, it's not politically feasible to tax the ultra rich like that. And even if it was, the ultra rich just wouldn't own it personally anymore. That's what, you know, that's what tax lawyers are for, to not pay those silly taxes. So this just screams like election stuff, not real life. But it's a great headline.
Next up, Eisenberg's conviction in manipulating Solana DeFi platform Mango Markets and stealing 110 million in cryptocurrency has sparked discussion on the legal implications of DeFi exploits. Sandy, what's your thoughts here?
This is an interesting one. I'll try not to get too technical about it, but I'll start off by saying, so what happens in a case like this? This happened with a lot of platforms back in DeFi summer, which is maybe more than 2 years ago now, 3 years ago. I'm losing track. With the rise of these decentralized exchanges, decentralized lending platforms especially, came a lot of exploits which work on, I guess, the manipulation of the price of a token, because the whole concept of how these things work is based on the price of a particular token. You can deposit into a platform and then you can borrow out money against it, usually at max of 80% of the value, sometimes maybe 50% of the value, but you can borrow like stable coins against this more volatile asset. And then, in that way, you can then take the stable coins, invest in other things if you want, and you're preserving the value that you hope to gain from the more volatile assets. But the problem is, because it's all decentralized, everything's put into the pool, people then try to exploit these contracts. What this guy did is the platform allowed a pretty small volume volatile asset as a collateral. So what they've done is gone ahead and, using smart contracts, try to manipulate the price of that token so that suddenly the price of the token is worth many times more than it should be. Then they borrow out a much larger sum of money than they should be able to against this collateral. And then when the transaction is finished, the price dumps back down, and then now the protocol's basically got a bad debt because maybe there's $10 million say in this contract. They've made the price so high, this token price so high, that they can borrow out $5 million of that when they should have only been able to borrow out 100,000, for example. And now all of a sudden, the people who had put the stablecoins in to let people borrow can't get their money back because the platform never should allow this much token to be borrowed by this volatile asset. The stablecoin can't be paid back anymore, and now there's a deficit. So that's how the basics of how this works. This developer tried to say it as well. There's a video out there saying that, well, look, I haven't done anything that the smart contract didn't allow me to do. Right? This is all within the rules of what the smart contract allowed. I think this guy actually tweeted after it happened that he said that, me and my team were involved in a very profitable trading strategy over the weekend.
That's the one. That's what I love. Highly profitable trading strategy.
Yeah, exactly. So they made this gain, and they're such a good white hat hacker. They're saying, well, we hacked like $100 million. We're offering to return you $60 million. We just want to keep 40 million, as a white hat bounty. So that's basically what they've done. And look, there are cases of white hat hacking, people that find exploits, they go ahead and hack the funds, and then they'll return it. So they might have hacked 100 million, 10 million, whatever it is, and they'll return it. And in return, often these protocols might give them like a white hat of 1%. So if the hack was $10 million, the guy still gets 100,000. That's a pretty good deal. And the people on the platform, if they had to make up for that hole, they're only making up with 1% of the asset. I think that's fair, right? Or the protocol maybe cover it themselves because they should have made things more secure. That's fair. But this guy has basically hacked $100 million and wanted to keep 40 million as a bounty. That's just. But on the legal side, the arguments I think are interesting. In this case, this guy has been found guilty of fraud. Not surprisingly, I think. The thing is, he's sort of opened multiple accounts under his own name and try to manipulate the perpetuals market to manipulate the prices of tokens so he can carry out this attack. There's a point at which you cross into, for example, anybody that's hacking a bank system, for example, right? There are security measures in place, but then they find a way around it. And you can potentially argue, well, look, I found my way around it, but this is through code, right? This code had this flaw. I exploited it. You could try to argue and say, well, look, I technically didn't do anything that the code didn't allow me to do because I just found a workaround. But there's a point at which you go into fraud territory because the code is obviously not being used how it was supposed to be used. And you kind of go around that intention, and you had this dishonest intention going into finding this workaround. So that's the point at which you cross into fraud. I think that here, with all this manipulation of the price through perpetual contracts, which all under his own name, that's what would have pushed into definite fraud territory. There are other attacks that's being done on platforms where they've used flash loans, for example, which again, I'll try not to get too technical, but flash loan is basically a way to borrow a large sum of money and return that money in one transaction, right? And that's allowed by lending platforms because within the same transaction, you borrow it, you use that money, could be $10 million, $100 million. You use that money to conduct an arbitrage trade, which is quite legitimate, right? Like you try to arbitrage, and with $100 million, if you earn 0.01%, it's still a lot of money. That's how these loans are supposed to be used. Now, if a hacker goes and uses a flash loan, which is, again, supposed to be allowed, then they buy up this token, which makes the price higher, which, again, is supposed to be how it's supposed to happen. And then they borrow out money because the platform allows it because the token is now a much higher price. Again, that's supposed to happen. So if you take through all those steps using tools that are actually supposed to be used in that way, I think you have a problem with, like, legally speaking, has that been fraud? I'm not saying that it's not fraud, but I think in that case, things might be a bit more arguable. It might get a bit interesting. But look, at the end of the day, even if that's not fraud, it's just, even if it's legally not fraud, it's obviously dishonest, right? And it's obviously unethical. Like, if you ever did anything like that and try to keep most of the money as some sort of bounty, it's just like, I don't know what you're trying to achieve there or what you're trying to argue. At the end of the day, that's whatever legal arguments there are, you're going to be seen as a fraud.
I think you raised something really interesting, Sandy, about what was the intention of the code. And obviously it wasn't to let this dude run off with $100 million. But the whole perspective that people have is that, law sucks and, code should be law. That's what sort of, hardcore coders think. But then when the code doesn't go right, you've got to either live with the consequences, or you've got to actually do that analysis and go, well, what do we really want to do? What was this intended to do? And it failed, should be fixed. And that's kind of like how legal interpretation works. For interpreting statutes, it's like, well, yeah, sure, here's what it says, but it might actually have a different meaning because of the context around it. And, courts can fix that. But when it's code, you can't. So whether it's fraud because of the specific actions on the smart contract is one thing, but if the overall outcome is fraud, then I think they get to the right decision. But if you get too granular, I think you get a bit lost in those details. It's very hard to go, well, it wasn't meant for that to happen. It's like, well, it allowed for it. It did.
Yeah, I think the problem with this is, at this point, at this point, this sort of thing is pretty well known now. If you use a low volume volatile token as a collateral, this can happen. You don't need to hack or manipulate the price using perpetual contracts or whatever, or even a flash loan. Literally, somebody who has $100 million capital can come in and do this with that money, because that's how these DeFi platforms work. If you dump $100 million into buying this token, the price is going to go up 10,000 times. That's just how it works. If the price goes up 10,000 times, you can borrow a lot more money from it. Again, that's how these things work. So I think at this point, it's really almost criminal for a lending platform to allow this to happen. But at the same time, you can't just say, well, so I had no security on my house and I left my door open. That doesn't mean it's now legal to steal from my house, right? There's still those kind of arguments as well. So you gotta find a balance. But I think at this point, though, crypto being what it is, and the scene, like you say, a lot of these crypto natives will say that they like the fact that code is law. Well, in that case, you better make sure your code is up to scratch, because if you still allow this to happen in this day and age, after like dozens of exploits on similar platforms, you're really just being very negligent about this. Like it really shouldn't happen anymore.
I think to change gears there, I think the real takeaway is if you're going to do a highly profitable trading strategy that may be criminal, don't tweet about it on the internet.
That too, yes.
Like this guy could have been a ghost, and they would have had to get Chainalysis and law enforcement involved to find him. But within an hour, he was posting about how he did it on Twitter. That was probably the dumbest bit of the whole thing. Was if you're going to commit crimes, don't put them on social media. A very good friend of mine always told me that. So, or just don't commit crimes is the alternative. Only suits some people, that one.
Just to add to that as well, Harry and Sandy, it almost brings in philosophical questions about how you want to be regulated for consumer protection purposes. So on the one hand, if you have the mentality that code should be law, if there's any deficiencies in the code that allows for exploitation of the platform, then tough luck, suck it up mentality. There are some people in the space that are quite happy to have that as an actual way of governing themselves. But for the layperson who's wanting to enter the cryptocurrency space, they need sufficient protections in place. And so, this goes back to conversations I remember hearing back in 2017 about the philosophical arguments of regulating cryptocurrencies. It's almost worth considering, at least, if you are going to create a decentralized platform that allows, it's not intended to allow for, but where there's a vulnerability of code being exploited, having some sort of disclaimer, I don't know whether you could have that even in the protocol itself, that effectively warns anyone that wants to participate in that platform that, look, there are risks here. You can be exploited for this amount of money. Now, this can all exist in a decentralized way of doing things. And then conversely, you can have centralized, or not centralized, but cryptocurrencies that are regulated centrally, so where code isn't law. And then those actors or those participants or those developers are now accountable legally for any exploitation of the code. So there's no question around whether, okay, the code allowed us to do this. It allowed me to exploit this. And you don't have to go into the splitting of hairs around legal arguments as to whether this was in fact allowed to occur. So it's interesting. I just found it, and this is what I love about cryptocurrencies, is that it brings in so many philosophical discussions about how you want things to be governed from the ground up.
Typical us, we've gone a little bit over time. So Harrison, thank you so much for coming on today and sharing your expertise and insights. We greatly, greatly appreciate it. Before you go, can you please let our listeners know where to find more about you?
Yeah, of course. First of all, thanks for having me on and thanks for the invite. You can find me basically everywhere. I'm like a weed. My website, cadetalegal.com.au. I'm on TikTok. If you look up Harry Dell Tax Talk. I'm on Twitter, X a bit, not as much. I'm on LinkedIn. Look, if you just Google me, you'll find me. Not a flex, but it's for a statement I now live too publicly in the world. So if you want to find me, feel free.
We'll put your details in the show notes as well. So if you do have any trouble, they'll be there. Excellent. Thank you.
Thanks, Harry.
And the last headline for the day, RFK Jr., I'm going to put the entire US budget on blockchain. So at a recent rally in Michigan, independent presidential candidate Robert F. Kennedy Jr. made a bold statement about putting the entire US budget on the blockchain for transparency and accountability. Undoubtedly an ambitious proposal with potential implications for government spending oversight. Inoke, what's your thoughts here on the feasibility and impact of such a move?
I really like his thinking on the matter. RFK's been an advocate for the cryptocurrency industry for a few years. I believe he accepts Bitcoin as a form of donation for his campaign trail as well. And he's famously been against CBDCs as well. So he has what seems to be some understanding of the cryptocurrency space. I do like the idea of having everything transparent, but the logistics of actually putting everything on the blockchain is a whole different question itself. You've got to consider things like cybersecurity, logistical hacks, and things like that. I think it's a great idea. In the article, it talks about how, he doesn't want a situation where the Pentagon is paying $640 per toilet seat, and that basically go unnoticed. So it makes sense from a transparency point of view. I don't know whether it would be possible to implement within the first 4 years of his presidency. There's which blockchain would you use? Which is the most secure? I think it's a great idea in the long term. And I do like the fact that there's a candidate going through for the presidency that is pro cryptocurrency as well. I'm all for it.
I'm seeing so many issues with execution with this. That's a problem. I mean, I'd love the idea of being transparent as well. I mean, this is almost like a holy grail for blockchain, right? The things they can, like, ideally, from a philosophical perspective, you want to be able to trace all this kind of thing. Public spending, charity donations, these are kind of things that can benefit the most from a fully transparent and traceable chain of spending. But to actually implement it, I mean, for example, you want to put the budget on the blockchain. So then you want to be able to say that, okay, you can tell from the blockchain that this much of the budget has gone to this area. But how can you really say that? If you're paying, as you say, $640 per toilet seat to a contractor, how do you even, like, if you want to put that on the blockchain, when you pay a contractor to buy toilet seats for the White House or whatever it is, you first going to require that contractor has a blockchain address that you then send the money to, right? So, and then if you get over that hurdle, that is requiring every contractor that works with the government to have a blockchain address to receive money with, then there's a question of, well, the chain's going to end when the money gets there. If they then take the money, like, to convert it to fiat, and then that company then distributes it and then pays half of that money to a terrorist, again, you won't know. How do you actually make it fully transparent? The only way it works in a fully transparent basis is if everybody's on the blockchain, and every step of the way when the money flows down, you can actually identify who owns the wallet at each address. And I'm not sure if that's ever going to be possible, really. Like, you can only do it to such a degree.
Yeah, like, from a practical perspective, to deploy any form of budget on the blockchain, at some point, you're just going to hit a point where you have to just have data entry, right? And so then you're just relying on the accuracy of the data entry at whatever endpoints you've got. Then that's so many more points of failure.
Yeah.
So, like, I totally agree. I love the idea. It's probably impossible, at least today, to really execute on this.
Yeah, to a degree, depending on how far you implement the idea, I think it's better than not transparent at all. But to try and suggest that you can make it fully traceable or fully transparent, I don't think that's possible. You can only do it to a certain degree, and it's not anywhere near like a fully transparent sort of thing. Because, as I said, like, even if you get to the point where every contractor requires a blockchain address, so you know that where the money is being sent to, it's sent to this contractor. Well, great. Somebody can create a new company, get a blockchain address, receive the money from there, looks like a clean record, but then this company can then go, and after they cash out the money from Ethereum or whatever it is, or USDT or whatever it is, they can then distribute that money to other people that are unscrupulous or whatever it is, and you won't know. So you can't really prove it to that point, right? Like, whether money is being later on distributed around in some other shady way. You won't ever be able to fully trace it in that sense, I think.
Do you think this would actually be a possibility down the track, that something like this could be implemented?
If blockchain becomes mainstream to the point that basically everybody has a blockchain wallet, then potentially you can make it a lot more traceable. But I don't think it will ever be fully traceable, because, like I said, you're going to have to, you can get to the point where every company has a blockchain address. You can pay that company, so you can publicly see that the government sent this much money to this company. But then at some point, like, unless the whole world is on blockchain and everybody doesn't use fiat money anymore, at some point that chain of traceability is going to break. Even if the company then takes it to pay directors, pay shareholders, pay suppliers, etc. If they take that money out and then send it through traditional finance methods, that's, again, not publicly traceable again. So you can't, I think that the risk with using this as a sensationalist sort of headline to suggest that this is going to make everything transparent, we're going to be able to trace everything, is that inevitably, if they try to implement it, at some point, it's not going to be traceable, and at some point, money is still going to flow to a bad actor, and then people are going to be like, well, look at that, blockchain didn't fix anything. So, I think that will happen sooner or later.
He might be eating his words if he gets elected. I think we've ran out of time for today, but thank you very much for tuning in. If you're enjoying our conversations, please consider liking and subscribing. And if you have any questions, feel free to reach out to us. We'll be back in your ears or on your screens very soon.